the question here was that you had a company which was recognized as a personal services provider. So the clients and the customers, when they paid the PSP, withheld PAYE on the payments to the PSP, as they are required to do under law. And the question is, all right, now that I've made a loss in the current year of assessment, what happens to the amounts paid on my behalf? And the answer to that one is actually quite simple, is the PAYE that was withheld on the payments made to the PSP become a, are a credit amount for provisional tax purposes. So the way I get my refund, as it were, is I submit my provisional tax returns. Those credit amounts would then go through as provisional tax payments. And then when I do the submission of my tax return for that particular year of assessment, right, there would be you would then get a refund for that PAYE withheld for you. Right. So you wouldn't get it as a credit against your other taxes, but it would be a refund through to you because it effectively, think of it like an overpayment of provisional tax. Right. Please also remember, if you have a PSP, not all there's a limitation on the expenses that can be deducted per Section 23K. And if you want more detail on those, please go and have a look at Interpretation Note 35. Right. Second PSP question, I'll give you a minute to read that. This question implies to me, I get the impression from this question that the person who asked it doesn't fully understand what the PSP provisions are trying to do. Essentially, the PAYE is not, there are two separate PAYE events. Effectively, we've got the company, we've got the director, and then we've got the client. What the PSP provisions are essentially trying to say is that normally when the client pays the company, we would treat that as normal income and we would not do anything else. But what the PSP provisions say is that the client is required to tax or to treat the company as an employee. So from the client's point of view, the company effectively becomes an employee from which PAYE has to be withheld. Okay. Then there's a secondary leg where when we look at the company itself and then look at the director, the company then is still the employer with respect to the director. So what's paid to the company and what's paid to the director are two integrally separate transactions and don't influence the PAYE paid to the other. Because on the 40,000 paid to the company, the responsibility sits with the client. The client is the employer. On the amount paid to the director, the company is the employer and responsible for the PAYE. And obviously, the company would then only withhold PAYE on the amounts that they actually physically pay to the director. And yes, absolutely, you would have a scenario there where you have cash flow problems because let's just use very simple numbers because we're just doing this for illustrative purposes. So of the 40,000, we would withhold 15,000 PAYE, which means the company would only actually get 25,000 in taxes or 25,000 in cash. It would have to reflect gross income of 40, show provisional tax or PAYE of 15,000 paid, and then 25,000 in cash. Then when the company pays the employee, they would show an employee's expense of 20,000, and in the director's books, they would show gross income or remuneration of 20 less 8,000 rands worth of PAYE, cash received of 12,000. So you also need to remember that the PAYE paid is different. The PAYE between client and company is essentially provisional tax for the company. What's paid to the director is part of the tax liability of the director, just paid by the employer.